Hello everyone, as you know, I've been very adamantly bullish for the past 2 weeks, and now we've seen new all-time highs. So in today's video, I'm going to go over and explain what the next steps are. We're going to take a look at why these things were happening. We're going to recap my thought process, and we're going to make future predictions of price action as well. So in today's video, we're going to go over the SP 500, the large tech stocks. We have to take a look at the large tech stocks, the VIX. We're going to take a look at crypto, Bitcoin, Solana, Ethereum, and Forex as well. So I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all of that. Let's get started with the video. All right, first and foremost, to recap, I was very, very bullish on Apple, and I was also very bullish on Google. So I posted these tweets a few days ago, basically saying these are really good opportunities to go long, right? Very, very good setups. So essentially, when these large tech stocks that are trillion-dollar companies that move the market, right? The Mag 7 of these companies essentially move the market, right? If Google and Apple, two of the largest companies in the world, are setting up to have a bullish move, then you have to understand that the odds of the overall market, the S&P 500, the NASDAQ, crypto, the odds of the overall market to rise is also going to be very, very important, and a very, very high likelihood chance that it's also going to rise, okay? If more of these large tech stocks start to show strength, that only adds to the odds of a bounce. If all 7 of the Mag 7 stocks look very, very bearish, chances are the NASDAQ and the S&P 500 is also going to fall lower, right? So with that being said, we have been looking at the large tech stocks as a whole. We've also been looking at the VIX as general indicators of where the overall market is going to go. Because as you know, you can't just look at the S&P 500. You can't just look at the NASDAQ itself to be able to see where these are going to go. These are influenced by other things. So to really, really get an understanding of where these will be influenced, you have to also look at those other influencers on these indices and ETFs. Now, with that being said, I first want to go and take a look at the NASDAQ, because the NASDAQ is very, very important. We have been trading in a solid uptrend for this entire time. And we have been holding this trend line multiple times, multiple touches. If we fell below it, then it really capitulated a bit lower, but we ended up bouncing back above and holding due to the strength of the market. The NASDAQ looks very, very strong, clearly, right? And we just reclaimed, we held, we tested. This is still looking like we could see 23,100 pretty comfortably in the next week, right? But this is setting up for a very, very abnormally bullish move, in my opinion. And to see how much further the NASDAQ is going to go, you have to take a look at the large tech stocks, okay? Now, but before we do that, I want to go over some trades that we took in the morning. We went long on the NASDAQ and the S&P 500, trading 0 DTE options. These trades went comfortably up over 100%, and this was the overall low of the day. We ended up going long, both of them before 9:40 or very, very early in the day, maybe even 9:35. So we went long the S&P and the NASDAQ, and it just rallied the entire time. I was bullish all throughout here. I was calling the levels that needed to hold very, very perfectly. So essentially, it worked out really, really well. It's kind of late here. It's 12 a.m. I didn't want to miss a day of not posting, but I am posting because this is important. So all of this is bullish in general, right? So because I've been very, very adamantly bullish, when things look bullish on a daily time frame, chances are once you start going lower and lower on the time frames, price action is just going to levitate in that direction. If the market is very, very bearish on a weekly, a monthly, a daily time frame, day trading towards the downside becomes much more easy, right? So simply what we did in the first few minutes of the day, we had a bias. I saw certain levels holding as support. I saw the momentum. I saw the large tech stocks doing well also. All of these were precursors for my bullish bias. It also helped a lot that my trading view indicator was also very, very bullish. So if you guys also want access to my trading view indicator, obviously it doesn't work perfectly. No indicator does, right? But when the market is very, very momentum driven, right, you can see that it works really, really well. So this morning we got the long signal. We got the long signal on the 3, the 5, the 15-minute time frame. When multiple time frames are giving long signals, this really increases the likelihood of price moving in that direction, right? So that, alongside my own analysis, alongside looking at the large tech stocks, all of these things gave a very, very good indication that the market was going to bounce in the morning. So we took the longs, comfortable, really, really solid trade. We made a lot of money, and people had a bullish bias for the rest of the day. It worked out very, very well. So with that being said, if you guys want access to my Discord server, to this trading view indicator, click the link down below and you'll gain access to a 7-day free trial for this. You have nothing to lose. If you don't see value in it, you could always cancel it, and no cost to you. So with that being said, that's what we did to the NASDAQ actually this morning. So if you guys anyway, let's go ahead and take a look at the large tech stocks. All right, so first one up is Apple. So Apple has been a lagger. It's been a loser, right? Compared to the other indices, compared to the NASDAQ itself, it has been underperforming. When these large tech stocks are underperformers, while the rest of the market looks very, very strong, there is a very high likelihood that these underperformers will also start to catch up. Money will rotate out of the winners into these losers. So we're clearly seeing that right now. Apple is bouncing out of a very, very nice bull flag at these into just extreme weakness. Very, very solid opportunity to have gone long with high risk reward, and that's exactly why in the past couple of days we're up 5 or 6%, right? So this is a really, really solid opportunity, and it's working out very, very well. The fact that Apple is strong is a good inclination that the overall market is also going to be strong. So not only is Apple strong, not only did Apple start to break out of its downtrend, Google is also starting to do that as well. Google is a very, very solid, obviously multi-trillion-dollar company, starting to show strength. And essentially we held the 50% fib here on Google very, very well. Essentially, just you want to see large tech stocks holding support or doing strong, while basically you want to see the losers start to do well and the winners start to either come back to levels of support or even just stagnate at the highs, right? So essentially that's what's going on. We see Google and Apple bouncing. We see Tesla bouncing. What we need to continue seeing now is monitor. We need to see the other large tech stocks. So how is NVIDIA and AMD? NVIDIA bounced very, very aggressively. And just a couple hours ago, Trump announced that he would be easing the tensions on China's chip making process. So I'm not sure how that's going to affect NVIDIA's price. That might be bullish, but as you could see, NVIDIA had a pullback, but then today we were up 2.5%. AMD, we dropped at 135 support, held, and we retested 140 today. So there's clear strength into this weakness that we're seeing overall. Now, are we going to continue seeing strength? Are we going to continue seeing continued strength in NVIDIA, AMD? Or are we going to continue falling down? Because if we drop below 135 on AMD, 129 is very, very possible. If this ends up falling, then it's going to be heavier a bit on NVIDIA. But the fact that NVIDIA had such a strong move is very, very enticing. So the fact that NVIDIA is moving this strong, there's a high probability that NVIDIA makes a new high and AMD follows. So essentially, that's what I think is going to end up happening with these large tech stocks. I could be wrong, but Amazon is also one of these large tech stocks that was bouncing, and now it's just stagnating a bit. So Amazon was also one of the losers, right? It was also another stock that I was saying about a week and a half ago that we would end up showing some strength and bouncing. So essentially, we're seeing that right now on Amazon. We broke out of a downtrend. Now we're stagnating at resistance at 222.40. Very, very simple. What really, really drives this home is the winners are starting to pull back a bit. So Netflix, we've been skyrocketing on Netflix very, very aggressively. The winners are going to pull back a bit while the money flows into the losers. Meta, another winner. The winners that have been skyrocketing are going to get pullbacks. So essentially, that's what's going on. And Microsoft is also holding support. It's holding this trend line. Very, very simple. Clear as day. As you can see, all of this is essentially in an uptrend. We're holding the uptrend, and all eyes on Apple, Tesla, Amazon, NVDA, and AMD. If those remain bullish, then it doesn't really matter how much lower Netflix or Meta drop, because as you can see, Netflix and Meta have been very, very red. Right? Clearly, they've been very, very red. But the S&P 500 is making new highs. The NASDAQ is also essentially almost at a new all-time high. So you have to realize this is a very, very pivotal moment for the overall market. If these losers start to show a lot more strength, then the overall market, Meta, Netflix, all of these other stocks, Microsoft, are going to all continue to skyrocket and bounce off of support, led by those other stocks. And then the rotation is going to continue. So these next few days is very, very important in my opinion for these large tech stocks. So that's that for the NASDAQ and the large tech stocks. The ES has more time, has more space to go to the trend line, to the upside. So 6,300, 6,350 are all on the table. And this trend line, once again, has been very, very important. This is back in October of 2023 here. We got multiple touches. One back here in August of 2024. This is just the perfect trend line. And back here in March, this acted as support. It broke, and then it acted as a resistance. We got a bounce back here, and then it didn't work. And it led to more weakness to the downside. And now we are coming back to this trend line. It doesn't get much cleaner than this. So we're getting close to this trend line. We're going to have to see if we get a proper touch. But so far, it's been very, very good to be bullish. The other thing that I also want to go ahead and take a look at is the IWM. So the IWM is the Russell 2000. It is 2,000 of the most economically sensitive stocks, banks, healthcare-related stocks, transportation, oil. All of these regional banks. So these companies in the Russell 2000 generally don't do as well as the growth in the tech stocks, right? So as you can see, the Russell 2000 looks similar to what Apple, Amazon, Google looked like. It's a lagger. It is lagging compared to the S&P 500 and the NASDAQ. When a lagger is lagging, right, money is going to flow out of the winners into the losers. Money is flowing out of Netflix, Meta, Mag 7 related stocks, and it's being rotated into higher probability stocks of bouncing and making new highs. So if Meta, so this, say for example, this is highs, right? Say Meta, Netflix, they're all new all-time highs, right? Why would you want to say for example, you were going to put a set percentage of your portfolio into a trade, say 10%. Why would you put 10% of your portfolio into a new all-time high stock when you could look for a good opportunity while you see the overall market is strong, while you look at all the other factors, you deduce, wow, it actually makes sense to try to go long the losers instead of trying to just long into extreme strength and chase, So that's what a lot of people did. That's what these banks, hedge funds, that's what institutions essentially did. They piled their money into the laggers. So that's why you're seeing Apple, Google, Amazon, and the Russell. That's why you're seeing the other sectors in the Russell do so. Not the Russell, but the financial sector, for example. Why is the financial sector making new all-time highs? Another reason is the Russell is basically catching strength from the banks and the financial sector doing well. The industrial sector is also doing very well. It's just skyrocketing, making new all-time highs. So, very simply, the factors that move these indices are doing very, very well. And we've just been making money, just staying bullish and swing trading calls and just being very, very bullish on the market. And it's been working fantastically. There's no real inclination, or there's nothing that really shows us that we're going to start dropping. Maybe once we get closer to 6,300, maybe if we touch this trend line, there could be a bit of a pullback. So basically the risk of being long as we get up here starts to increase. So this whole area of 62.80 to 63.30-ish area is risky to go long, because this would be a good opportunity for everyone to essentially take profit on longs. So that is currently the issue, because we've been long for a very, very long time. People that went long down here, if they didn't take any profit over here, they're absolutely going to be taking profit here. Okay? If the people that went long over here or here, they're also going to be taking profit after basically a completely strong shoot up, right? You're not going to assume that strength like this is going to just automatically sustain itself for every single day. We're just going to see green after green after green. There needs to be a point where people are going to take a little bit of profit. So on a chart, when people are taking profit, or when people are looking to take profit, what does that do? That stops the buying pressure. That increases the selling pressure, and that becomes a point where sellers start to enjoy themselves, and that's when price starts to fall a bit lower. So that's currently what I think might end up happening. We need to see if we get a touch of this trend line. I don't want to just start going short just yet. But most likely I'm going to start taking profit on my longs soon. Most likely as we get to this level, because we're up hundreds of percentage on our calls. Some of them I haven't even taken any profit. So actually, basically all of my September calls, and I'm still holding some of my July calls, but I haven't taken any profit on my September calls. So that is, we're very, very comfortable. So this is where I'm going to start taking profit, most likely, unfortunately. And then just by default, I'm most likely going to swing some shorts, see where life takes us. All right. But with that being said, last but not least, we have to take a look at the VIX. All right. So the VIX is so important to look at, because if the VIX is weak, then the overall market is going to be strong. So it has an inverse relationship to the overall market. If the VIX continues to remain weak, the overall market is going to continue bouncing. So as long as the VIX remains below $17, it needs to remain below $17. If it remains below $17, then the overall market is going to remain bullish. Currently, we see the VIX is below 17. It's trading at 1650. So this is bullish for the overall market. But the issue is that now we are seeing the VIX start to really hold this 1650 area very, very well as support. And if this holds as support and bounces a bit, if the VIX is bouncing, the overall market should be falling. So this also sort of coincides with where I want to take profit on the S&P 500. So, or start to take profit. So this is essentially the issue here. So, but overall, the next 2 to 3 months, I'm very, very bullish on the market. Every dip is a great buying opportunity. In no way, shape, or form am I saying to become bearish. Instead, I'm saying to buy every dip. Even if you don't want to buy every dip, just remain bullish on every dip. Do not aggressively become bearish for the next 2 months, 3 months. Okay? Everything is a good buying opportunity. So, I hope that makes sense. I hope you guys enjoyed the stock portion. Let's go ahead and take a look at crypto. I said to remain bullish on Bitcoin. I was very, very adamant for everyone to remain bullish on crypto. This was a very, very amazing opportunity to just be long, to remain long. This was a very, very solid level of support. This is the 50% fib, 105,000 on Bitcoin. Solid, just great level of support. What's the point of chasing into weakness? The past 2 days ago, right? When we hit this big red candle, we fell, right? Why would you want to try to short and chase when the overall market is setting up for a rip? This is a bull flag, guys. You don't just try to short into this weakness and say, "Oh wow, we can end up dropping down to 100 or 98. Wow, we could come back down to the lower end of this bull flag. We have great risk reward to go short at this level here." And great, right? On paper, good short, right? Technically, mentally, great short. But if the overall market, if the S&P 500, the NASDAQ, these large tech stocks are showing so much strength, why would you decide to start being bearish on crypto? Why would you decide to be bearish on crypto when Coin, when Robinhood, when these stocks are starting to be very, very bullish because of their crypto adoption? Hood is very bullish because of Ethereum, and they're building on Ethereum. So you have to realize and do analysis on every other sector. You can't just trade crypto as its own entity. Crypto is moved by the overall stock market. So it's very, very important to do analysis on everything at the same time. With that being said, the fact that the overall market has been very, very bullish, and we've been monitoring this day in and day out, crypto, perfect setup to be long. And not just that, right? The really other major factors, because you have to look at all the factors all at once. The more factors that you look at, the higher the chance, the more factors that you look at, and if a lot of those factors are bullish or they're leaning bullish, then the odds of us bouncing or continuing to remain bullish increases. So the factors for Bitcoin are the S&P 500, the NASDAQ, the large tech stocks, the IWM, other crypto-related stocks on the stock market. Okay? All of those are very, very important factors. Two other very, very important factors are Ethereum and Solana. So I have been very, very adamant to be bullish on Solana. I've been telling people to remain bullish. I've been begging people to remain bullish. This is a clear-cut bounce. This is essentially just really setting up for a nice bounce. Any weakness that we get is a good dip buying opportunity. Solana is a better technology than Ethereum. Ethereum is getting a lot of financial backing and institutional love, but Solana as a technology is much better. Okay? So essentially, as you can see, there's such a large percentage gain to the upside that we would get if we just went long on Solana, if we were bullish on crypto, instead of trying to chase. So in terms of a risk reward, there's a very high likelihood that if you went long this, in the next 2 or 3 years, you would get 100% return. We would see a retest of the highs. Generally, right? If the market is going to just really, really rally, if you just hold on to Solana and buy it right now, most likely in the next few years, we'll see a new all-time high. This isn't financial advice. I'm not your financial advisor, right? So would that be a better trade, or would trying to short this to 13, or obviously 13 is not going to happen, right? Trying to short this to 60, trying to short this to 100, possible, right? Trying to short this to the recent lows, right, at 95. So this is a 38% return to the downside. Spectacular. You might get this in the short term. This might happen in the short term. Great. But because it might happen in the short term, does that mean that you want to take this trade when the overall odds are always going to be bullish down here into this weakness? When Bitcoin is at all-time highs, retesting, it's showing strength. When the overall market, the stock market, is at all-time highs, the large tech stocks are strong, the SP500, the NASDAQ, strong. Is this when you want to start leaning bearish and trying to swing short on these large stocks, on these large cryptos, or do you want to remain long? So that's why just look for the long opportunities. If things do become extremely bearish, I'll let you guys know. But for now, just the risk reward in terms of going short compared to going long is not there. This is a really good bullish setup. It's looking for a rip to the upside. We might get a retest of the upper level of resistance that we broke. But as you can see, this is clear-cut support. It doesn't get much cleaner than this. This is really, really good support. And we might get a retest down to these lows. But overall, guys, this is very, very bullish. Ethereum also looks very, very bullish. A loser, lagger compared to Bitcoin, creating a bull flag right above the 38.2% fib on the daily from the recent highs to the lows. It literally, guys, this does not get much better than this. This is a bull flag looking for a rip to the upside. Hood, Robinhood, is building on Ethereum. It got a lot of institutional love. Hood has been on a tear. Okay? Hood has been on a tear, seeing new highs over and over. You have to put all of the dots together. If all of these cryptos are doing well, they're setting up at support. You just have to remain bullish, man. So I really, really hope this makes sense. I will let you guys know when things start becoming bearish, but overall, it's tough to be bearish, man. If we drop down below 108,000 on Bitcoin, if we fall back below really 142 on Solana, 140-ish on Solana, this area, if we just break down below here, like abruptly, and Ethereum, if we drop down below 250, it was on a 2250. So if it drops down below those levels, then things might start getting a bit dicey, but those are very, very major levels of support. So that's what we really just have to look for. So aside from that, that's really everything for crypto. And now let's go ahead and take a look at gold and the Forex market. All right, next, gold. Gold is very bullish. As you can see, it is also maintaining an uptrend level that we've been monitoring for very, very long. From January of 2025, you can see that it's been in an uptrend, touching multiple times here. Multiple touches. February, down here at April, touching literally down perfectly to these levels and holding a support. So as you can see, just recently we broke down below, right? But then the next day we ripped right back above. So we're maintaining above this uptrend level. We're maintaining above 33.30. This was the level that I said that bears really wanted to hold. We wanted to remain below 33.30. But as you can see, this level acted as support, and we bounced very, very aggressively off of it. So now that 33.30 level is going to remain the main key level of support. And if it does hold, then this can really start to rally. Maybe even at this point, 33.20. If this trend line in 33.20 can hold on gold, things look very, very bullish for a continued move to the upside. Euro, USD, also just in general, just looks very, very strong. We have been in a monster uptrend on the Euro USD. We have been in a massive downtrend on the monthly from July 2008. We are breaking above that in the past few months. In May, we broke above it and finally closed above in almost 20 years. So, with that being said, the Euro is definitely not something that you want to start shorting. It's been in a bear market, dropping essentially for almost 20 years, 15 to 20 years. Every dip on the Euro USD is a good buying opportunity. Every dip on the pound is a good buying opportunity. These two have been in a downtrend since 2008, and they are now bouncing out in the recent months. Now is not the time to be extremely bearish on the pound or the euro. Okay? Remain bullish. Gold is also doing very, very well. You can see that it is in a just complete uptrend, and there's no end in sight. So the last thing that you want to do overall in anything, in any bullish environment, is you want to stand in front of a freight train. You don't want to stand in front of a moving freight train going full speed ahead. This strength that we're seeing overall in the market is institutionally driven. You do not want to try to short and be a contrarian when things are very institutionally driven. You don't want to expect that buyers will stop buying. What you do want to expect is that sellers will stop selling. That's why buying the dip is always much easier than trying to short a top. In my opinion, when things are this strong on anything, on the large tech stocks, on gold, euro, the pound, anything, when things are this strong, don't really want to aggressively try to short. You would rather just look for dips and go long. So that's my thought process. I hope this makes sense. I hope you guys enjoyed today's video. Please make sure to like, share with your friends, subscribe to the channel if you guys found value, and I will see you guys tomorrow. Tomorrow's a half day, and then Friday is a day off. So I hope you guys enjoy. Please make sure to like, comment, subscribe, do all that good stuff, and have a good night. Thank you.